Hi, my name is John Batista. Welcome to fundraisor, where we will explore the cutting-edge ins and outs of fundraising. My guest today is Bijan Marashi, who is co-founder of Xoopit, one of the leading companies on the web helping to bring productivity tools, in particular around photo management, to your mail server and other aspects of your internet experience. Bijan, welcome today.
Thanks, John.
I'd like to explore some of the personal experiences that you've had in forming the company, both at the pre-funding stage and the funding stage. Maybe we could start with a little history of the company, how you and JK formed the company, and then we can move into your experiences in fundraising the company.
Okay, great. So let's see. Both JK and I are pretty hardcore product guys. We've been product managers at both of us at Microsoft and Inktomi, Tellme, Telecom Italia, and when in 2005-06, I was looking to start up a project, and I met up with the GM of Windows Vista, who introduced me to Hardy Partovi from iLike, and he introduced me to JK. We talked about some of the ideas with Xoopit, and we decided to team up and start a company. And so that's kind of how JK and I got together. So for you entrepreneurs out there, it's good to get out and talk to people. You'll meet great people, and you can start a company.
Now, you guys formed the company in the fall of 2006.
Yes.
And you had a rather unique structure for your fundraising.
Yes,
you had both angel investors and you had a venture investor
Yes.
come in for your seed round. And perhaps you could talk a little bit about the types of angel investors that you were exploring, and then as well who you brought in as your venture investor and why you made that decision.
Yeah, that's a good question. So at the seed round, we knew we wanted to build a pretty big product, technology heavy, not your typical Web 2.0 application, LAMP stack, PHP application on the web. You get it done in a couple of months. Xoopit goes and it indexes your mailbox. And so the indexing part means technology heavy. We had to build some pretty interesting search technology. So because that was our goal, we knew we needed to raise over $1 million. And we wanted to create a financing team that was kind of distributed throughout the industry. So what we did is we split the round between a great venture investor, Foundation Capital, who seeded us, and a group of angels who are industrial experts in social media, web search, internet portals. And so we have a whole bunch of people from eBay, Inktomi, Yahoo, iLike, a bunch of different people who are participating in the company. And
you mentioned earlier that Foundation played a very active role in helping to get the company started. Can you talk about that?
Yeah, I mean, those guys are great. And so when JK and I started, we had about 10 ideas for products. And a company like Xoopit could eventually build all 10, but really understanding which one we thought would take hold in the market and allow us to actually build a business first was a challenge, right? That's the challenge that every entrepreneur has. So what we did is we went and we met with Adam Grosser and Charles Maldau over at Foundation Capital 4 or 5 times in a 3-month period while we were formulating our ideas and building prototypes and talking to users and talking to businesses out there. And they really worked with us like executives or partners in the business, not really as prospective investors, but more like how can we focus these concepts into something that can actually become a business. And so that was a very valuable part of the process.
And so it became pretty clear that they were interested in the company, and you and Foundation sat down and hammered out the terms of the seed investment, which I understand was a convertible note initially.
Yes.
And then they led the round, you agreed upon terms, and then you were able to bring the other angel investors in on those terms.
Yes, that's exactly how it worked.
And you also had negotiated with Foundation a right to invest in the follow-on Series A.
We did.
And that's a term that we see a lot when venture investors are investing in a seed note deal.
Yep.
And many entrepreneurs try to avoid that provision. But maybe you can tell us a little bit about your experience and how that worked out in the end.
Sure. It's all about risk and how much capital is being put at risk. That's going to lead to the outcome of the negotiation on that term. And so what do I mean by that? If somebody's investing very little money, very early on, they're probably not going to be able to convince you that they should have the right to invest in the future. If someone's investing a whole hell of a lot of money before you have any proof in the marketplace, then they're going to have a pretty persuasive argument for why they should be able to invest in the future. And entrepreneurs who are in that, at that stage, because every business kind of starts from zero, where they're early on, they need a significant amount of capital to build out a technology. Almost every venture capitalist, if you will, is going to ask for that right, or professional angel who's going to actually put down that amount of money. So you can either try to get, 20 or 30 different angels giving you $25,000 to $50,000, or you can go directly to professional venture capitalists where they'll put down $750,000 or $1 million or $1.5 million, and they'll ask for that term.
You knew early on that you were going to raise both a seed round and that you were going to get to a venture round. And when you were looking for the seed investors, Foundation has a great reputation and ended up leading the seed round. Can you discuss a little bit about the process in getting to a Series A round and the role that your seed investors help play in getting to your first equity round?
So overall, it was an awesome experience. On the angel side, because we teamed up with industrial experts, or the smart money, people who have worked in the social media space and the web search space before, they were able to help make referrals to venture capitalists across the industry in very positive ways to take a look at the company as we were building it. So that was great from the angels. On the venture side of things, Foundation Capital also, interested in seeing the company succeed, opened the doors to us to all the top Silicon Valley venture capital firms. Made some calls in before we went and saw those guys, and that was very helpful for us as well, because we didn't have relationships with the Mayfield Fund, for example. Or
so Accel ended up coming in the Series A round.
They did.
They led that round. So how did you put Foundation and Accel together and your angel investors together to create a Series A round?
So that's an interesting story. So Accel led the round, which means that they priced the deal. We were out in the marketplace looking for the investors that we wanted to team up with. We met Teresa Ranzetta over at Accel, who has a lot of experience investing in email. In fact, she was on the board of Zimbra, and they sold Zimbra off to Yahoo. And when we met, it was a quick confluence of energies and aspirations. Teresa got very interested in doing the deal. We put together a price that we wanted for the deal that was what we thought reasonable, and what it also allowed the venture capitalists on both sides to take the ownership that they need to be able to bring back the returns for their funds. And it was because we kind of constructed a win-win deal that we were able to bring Foundation together and Accel together very, very quickly, and within a matter of days from when we met up with Accel, actually drive to closing the term sheet, start the diligence, and close the Series A.